live from the University of Nebraska at Kearney. It's the weekly Allowance, where real-world knowledge is discussed. Your future is what matters, and the broke college student is no longer the status quo. Young or old, don't put your future on hold. We welcome you to the show. I'm your host, Luke Rosenklaus, joined by co-host Austin Partridge. Austin, how's it going today?
It's going good, Luke. Thanks for asking. You know, it's that point in the semester where homework's kind of starting to pile up. Midterms are right around the corner if we haven't already taken them. And so, I'm actually taking an honors investment course this semester, and it has been one of the classes that I've put the most amount of work into, and it's just tough. We're working on an equity analysis right now, but we're getting through it, and I keep telling myself this is last year in college, so we'll get through it. And of course, especially for you, pretty much last semester for you. How are you doing today, Luke?
Yeah, pretty good. I went to do my practicum this afternoon, and Kearney High School got out an hour early today, so that was pretty nice. Actually, 2 hours early today, so that was nice. Got a kind of a short day there. Another week's in the books. It was kind of a short week coming off fall break, so we really only had to be in school for 3 days, so really can't complain about that either. And then don't really have much going on this weekend. Just have some time to relax, do some homework, but have a lot of time to relax. Kind of my first free weekend I've had in quite a bit, so looking forward to that. So today we're going to talk a little bit about credit cards for you guys and kind of everything with those, maybe the good that comes out of them, the bad that comes out of them, how they can get ugly pretty quickly. But for our first 15 minutes of the show, we just want to talk a little bit about what a credit card is, kind of what the difference between a credit card and a debit card is, what kind of credit cards are out there for you as a college student, maybe a high school student, and then kind of what age we think is appropriate to get some of these cards that we're going to talk about today. So, Austin, if you want to start us off, kind of what a credit card is to you and what it all means.
Yeah, sure. So I'm really excited about our show today, because credit cards are something that if used responsibly can really be used to our benefit, I believe, but they also can be disastrous to us financially if used irresponsibly. And so we're going to start this first segment off just talking about what credit cards are, credit card 101, if you will. So what are credit cards? Well, credit cards are issued by banks. They're also issued by non-financial institutions as well. Just as a way to be granted a certain line of credit, if you will, that can be used for purchases. The underlying theory on credit cards is that if you don't have the money to buy it outright right now, then you can use the financing that's lent to you by your bank through this credit card to actually make the purchase.
Yeah, I think the same thing. A credit card is pretty much just a small piece of plastic, kind of exactly like a debit card, like you said, issued by a bank, maybe a business, a store, that allows you to purchase a good or service on a line of credit. So you don't necessarily have to have the money at the time of the purchase, but come 30 days, whatever your term is on that purchase, come maybe the next 30 days, you're going to have to pay off that credit that you took out. So it allows you, it's not like a loan where you borrow huge sums of money, but more smaller amounts of money for a shorter time period. So like I said, usually there's about a 30-day grace period where you can borrow this money and then pay it back. And then how a credit card works is if you don't pay the money back in this, say, 30-day grace period, interest will start to accrue on that amount. And what you'll see with some credit cards and most credit cards is it's going to be a pretty high interest rate. It's not going to be our car loan interest rates that we talked about last week of 3 to 4%. It's going to be more like your 19, 20, 21, 22% interest rates on this money if you do not pay it back within that grace period that they give you.
Yeah, so it's a great idea. It sounds like a great idea in theory, right? You can have the item now and pay for it later. Well, great. But I really disagree with some of the theory behind credit cards. Obviously, Luke and I both agree that if you don't have the money to purchase it right now, then you really can't afford it. And I think if you don't have enough money in your account, you're really in no position to be buying things that maybe you don't necessarily need right now. But that's just what credit cards are. They're extensions of credit. They're quick, they're short-term, like Luke mentioned, short-term loans by banks. And you'll have your minimum payment that you have on your credit cards. If you buy something for, let's say, $100, maybe your minimum payment for that month is just $25. So you can carry that. The credit cards allow you to carry that balance over each month if you need to, if you don't have the cash to pay for it right now.
Yeah, I think that's a really good point that I kind of missed too, is they have high interest rates, but what they also have is considered a revolving line of credit, which means that as long as you are paying down on your card, which is pretty much making the minimum payments, you're still going to be able to use that card. So not necessarily, kind of like other loans, do you always have to keep up with the amount that you owe, but you do. I mean, you do have to keep up with those minimum payments, but as long as you're keeping up with those minimum payments, you don't necessarily need to pay the amount in full, and you can still keep using the credit card, which we've seen, and kind of why a lot of people are skeptical about credit cards is you can keep doing that and just build up your debt, but keep paying those minimum payments, and then you'll still be good to go because it is that revolving line of credit that they have with credit cards.
Yep, and we'll talk a little bit about the dangers of keeping that debt high on your credit card and carrying over that balance and just paying the minimum balance a little bit later in our segment.
Yeah, and so now that we've kind of established what credit cards are, we want to talk a little bit about what kind of credit cards are out there for high school students, for college students, and even young adults out there. And I think some of the most appealing credit cards that are out there for young adults right now are the ones that offer you incentives like cash back, different things like that. So you'll see some credit cards that offer 1 or 2% cash back on all purchases, or maybe some offer cash back specifically for gas and groceries. Maybe you'll get more cash back on this than that. Buying an item on Amazon instead of an item on something else, you might get more cash back for that. So you'll see a lot of high school, college, young adults going after those kind of cards to get that excess free money, I guess, because by no means are you going to get rich or become a millionaire off of this cash back that you get and those different things or the rewards that you get. But everyone does like a little bit of free cash coming into their account. So those are the few of the cards that you see high school students, college students, and then young adults getting. And I have a credit card right now, and I didn't get one until I was a junior in college. It was actually last spring is when I actually got one. And I actually found it pretty hard to get a credit card at first, which was weird. I was like, man, you would think they would just be handing these things out like candy to all the college students, because most people probably won't know how to use them. Bringing in the interest rates again, they're going to have debt on their credit cards. They're just going to be paying more for the things they're buying. So you'd think credit cards companies would love to give these to college students. But I applied for like 2-3 different credit cards, and I kept getting declined. It was like, no, you don't have a credit history. And then I was under the age of 21. I didn't really have like a steady income either, since I was just like working part-time. So they actually didn't allow for me to get one. So I actually had to go to my bank to go get a credit card, which I found to be a little bit weird, but I actually ended up getting one through my bank, and it worked out fine. But it was kind of a tougher process than I thought it might be.
Yeah, that's ironic that Luke Grossenclass was declined for a credit card. But yeah, I think credit cards are highly marketed to college students, and I don't think it's meant to take advantage of them at all, but I think that's a market that these credit card companies do see and that they are going to take advantage of. And so all sorts of cards out there, like Luke mentioned. Of course, we all know what a debit card is. There's also store credit cards out there, and I see these more and more now. Not to mention any specifics, but sometimes they'll offer in-store discounts. And my personal thoughts on this is, these are great if you can take advantage of them, but I wouldn't take them because I think they're gonna force you to spend a little bit more than you probably would have if you're just paying with cash or with a debit card. But definitely, know it's out there. If you shop a lot at a certain store, definitely see if there's a credit card available for you to get a little bit of a discount. But of course, don't carry that balance over and pay it off at the end of the month. And I think that'll be a way to kind of take advantage of that. So now we're going to talk about a little bit, what age should we get a credit card? And Luke mentioned he didn't have one until he was a junior in college, and I was just about the same. I had one my freshman year in college, and yeah, I had a few applications in the mail that came in about credit cards, and that's what kind of started getting me to think about, okay, should I be getting one? What types of rates are out there? And so I actually ended up taking the path that Luke took and applying for a credit card through my bank as well. And it's been convenient for me to just have everything in one place. I do mobile banking and online banking, and so just to log in on my phone and see my balance and pay it off each month within that app on my phone has just been really convenient for me.
Yeah, and I think it's true that once you get one credit card, I know that I get credit card applications in the mail all the time now from different credit card companies saying, okay, you have one now you're able to join with us, the ones that declined me at first. So it's kind of funny. I was like, I don't know if I want to work with you now that you declined me so many times, but it's funny that I keep getting all these different credit card applications in the mail now because they're pushing me to buy more and more, which I haven't done yet. I only have one. But when it comes to age, I mean, I waited till I was a junior in college, and it was because I was going out of the country. I was going on a trip to Rome, and I thought having a credit card would be a little bit more safe, a little more secure, and a little bit more easy that way for international fees and stuff like that. So I decided to get one. But when I think one of the, I guess, when it comes to the right age to get a credit card, I would say coming to college would be a good time to do so if you feel that you're knowledgeable enough to use it and that you kind of know what you're doing with it. I would never recommend a credit card to someone that doesn't think they can pay it off each month. I wouldn't recommend one to someone that doesn't even know the difference between a credit card and a debit card, which I think you see a lot of high school students coming out of high school don't really know what the difference between those two things is. So once you know kind of what a credit card is and what the difference between it is between maybe a credit and debit card, and once you think you have the income and the responsibility to pay it off, that could be the right time to get one. But like we said, if you're not responsible enough to kind of stay on top of things, know what your balance is, know when the due date of that balance is, then you can get into a lot of trouble by just missing maybe one payment. You can get in trouble paying an extra 20, 30, 50, 70, whatever amount of dollars on it if you just kind of miss one payment. So you have to have that right maturity level, that right responsibility level, and that kind of comes different with everyone, whether it's in high school or whether it's in college.
Yeah, I agree with that, and I'm the same way with Luke. I would recommend delaying that credit card until you get to college, and I don't really recommend college students even getting one if they don't need one. But I think it's a great way to pay for those emergencies if they should arise, and I don't necessarily think that they need to consistently use it. Only if they can use it responsibly and pay it off, like you mentioned, at the end of each month. Because we all know that they can be really dangerous if they are used irresponsibly and if payment gets out of control and spending gets out of control utilizing these credit cards.
Yeah, and I think the best thing to do before getting a credit card, which I think this is what most students do, but knowing how to utilize a debit card first, that's kind of a good foundation to set. Maybe writing a few checks using a debit card, because using plastic in general can be a little bit intimidating at first. So if you just go straight into using a credit card and a debit card and you really they're both plastic and they don't really have a difference to you, then it could be pretty dangerous in that route. So I would say using a debit card first for a few years, and then if you want to get a credit card once you come to college, then you'll at least know the difference because you've used a debit card without having a credit card for a few years. Then I've heard statistics, I think it was in my high school business class, maybe in some of my college business classes, that people have done studies on the differences between using plastic to buy things and then using actual physical cash. And they say that we tend to spend 12 to 18% more when we purchase things with plastic than when we purchase things with cash. So we spend less money when we see that physical cash coming out of our hands rather than swiping a plastic card. So that's something that can affect college and high school students as well. Psychologically, our brains aren't fully developed, and we kind of just can swipe our plastic and really not think about what we're doing at that young age as well.
Yeah, it's really tough to see that physical money leave your hand, and it's a little bit different when you're using a card. You don't really psychologically understand the implications that are happening there. But yeah, credit cards were so attractive to me when I was younger. I saw them used, and I thought, if I could buy something and not have to pay for it right now, why not? But as I came to college and became a little bit more educated on the subject, I really started to understand the negative implications that these credit cards can have, and so that's why we're going to do the show today to really help you guys understand the negative and the positives of these credit cards, and really just to allow you to think about it, and become more educated on the subject.
For sure. So that's a little wrap up of what a credit card is, what kind of cards are out there, what the differences are between all of them, and kind of the appropriate age to get a credit card and kind of the responsibility factor in doing all those things. So we're going to take a short break here. When we come back, Austin and I will be discussing the bad things that can result from having a credit card, because as we know, it's not always sunshine and rainbows when it comes to owning one. We'll discuss this and much more when we come back. It's 16 past the hour. This is the Weekly Allowance. Good stuff.
Now we're getting into the bad.
Getting into the bad.
Oh man.
I listened to Dave Ramsey videos. Dave Ramsey tends to think that the credit card in 20 years will kind of be looked at like smoking cigarettes is today. Back in the day, everyone smoked cigarettes, and if you didn't, you weren't cool in a sense. In today's society, everyone uses a credit card, and if you don't, then you're looked at as weird or not cool.
Yeah.
He believes that in 20 to 30 years, we will look back and see that credit cards did a lot more bad than they ever did good for anyone.
When do you want to say that?
I don't know. I could lead off with it if you want. I mean,
Yeah, sure.
okay. Otherwise, I just have some statistics, and then obviously, like, when you're irresponsible, it can cause you financial stress, can ruin your credit score, all that stuff. But
So if you want to do like a welcome back, and then literally just say welcome back, and I'm saying. So credit cards, I have a little spiel, and then I'll say, so in this segment we're going to discuss, get everything out on the line about the downside of credit cards.
yeah,
Luke, do you want to start us off?
yeah.
And then I have financial stress. What do you have talking about?
For financial stress, I'll probably talk about, like, I don't really have anything written down, but like how it can be when you miss one payment, it can be stressful to get caught up, and then it can be something where you just start to pay those minimum payments, and then you just completely forget that paying it off in full was even a thing that should be done, I guess. Something along those lines.
Yeah, it becomes overwhelming, I think.
Yeah.
And then talking about credit scores.
Mm-hmm.
And then
Yeah, I'd like to talk. I'll probably say something about how in society today, people think that, like, having a really high credit score is the main goal. Like, that's the ultimate goal, is to have a really good credit score.
Mhm.
And I'll probably say something like, yes, this is, like, it's a good goal to have a good credit score, but this doesn't always need to be the main focus. It is possible to live with, like, without a credit score, like our friend Dave Ramsey does it.
Mhm.
And all that stuff. Like, Dave Ramsey had an article that I'll probably read from, honestly,
Yeah, that's good.
about living without a credit score.
Yeah.
So, I'll, I'll read from that article a little bit. Because it talks about, like, how do I rent an apartment without a credit score? How do I take out a mortgage without a credit score? If an employer wants to see my credit score, what do I do during the interview process and stuff like that? So,
Yeah, that's good. You can just spend all the time on
I
that.
think that's off of that.
And then after that, I have to finish up, like, buying things on credit equals you can't afford them.
Okay. Yeah.
And then that's what I was gonna talk about, like, national average, percentage rate. And
Yeah.
then I have, like, an example of, like, say you have $1,000 balance on your credit card, and then you make the minimum payment, let's say it's $25. Then you pay that 15% interest on it, which is $146. All of a sudden your bill's $1,100.
Mm.
I can give that example.
My brother just sent in a question.
What is that?
Can your credit be affected if you spend less money or no money on your credit card during any given month? So if you have a credit card but you don't put any money on it, or like you put small amounts on it rather than like big amounts.
I think that actually helps your credit score, because when we were looking at it, but of course so when we looked at like credit reports, if they had like high, like if they used it a ton, that actually hurt their credit score.
Okay.
So I don't know if I don't think it would have a huge impact, but I think it actually helps it a little bit.
Okay. We'll answer it if we have time at the end.
Okay.
We can look it up next segment. We've got about 15 seconds. Alright. And we're back with the weekly allowance on 91.1 KLPR. Austin, what are we going to be talking about this next segment?
So yeah, this next segment's going to be interesting. So we all know that credit cards were designed to provide people with financing if they were short on cash, and we all understand the devastating implications that credit cards can have on people's financing. They can break you, and they can do it pretty easily because they are so easy to use, but yet they're a little bit harder to manage correctly. So in this next segment, we're going to get to we're going to get everything out on the line about the downside of credit cards. So Luke, do you want to start us off with this segment?
Yeah, and I want to go to a good friend of ours again, Dave Ramsey. I don't know if there's anyone in this world that dislikes credit cards more than our friend Dave Ramsey. He stands very firm on the fact that you should not own a credit card, which makes sense because he hosts a very nationally recognized radio show about getting out of debt, and credit cards are, in a sense, going into debt for a small amount of time and then paying it off. So it makes sense that he thinks that way. But I was watching one of his videos today, and this is kind of what he thinks about the subject. So he thinks that credit cards in 20 years will kind of be looked at like smoking cigarettes today. Back in the day, everyone smoked cigarettes, and if you didn't, you weren't very cool, in a sense. In today's society, everyone uses a credit card, and if you don't, then you're looked at as weird or not very cool. He believes that in 20 to 30 years, we will look back and see that credit cards did a lot more bad than they ever did good for anyone. So that's kind of just what he thought, going off a video that I watched. He has a lot of people call in and say, well, Dave, I have a credit card, but I pay it off each month, and I'm getting these benefits with it, and I never miss my payments, and I just have it to kind of build up my credit score and to get those benefits. But he still says that there's always that risk. There can always be a potential bad to come from it. Maybe if you end up losing your job, or you end up purchasing something that you actually can't afford, or just the potential risks. So he says, I'd rather not have the potential risk of having that with me or using that than gaining for maybe $300, $400 a year based off your benefits, or getting my frequent flyer miles up. He always says that I'd rather not have that risk, even if I do think that I can handle it at the time.
Yeah, Dave Ramsey takes a pretty strict stance on credit cards, and it's clear to see that people who he mentors and who he gives advice to, and listening to some of the calls that he takes, these credit cards can have disastrous implications on people's financial lives and their lives in general. And so we can understand where Dave Ramsey's coming from on this subject. Luke and I maybe might disagree a little bit on, not having a credit card at all. We do see some benefits of it, which we'll get to in a later segment. But yeah, we definitely want to take this segment and talk about the downsides to credit cards, because I think they can, if used irresponsibly, like we mentioned, they can be disastrous to your financial life. And so, this first part, we're going to talk a little bit about the financial stress of credit cards. Having a credit card really adds to your financial stress, and it can do this in several ways. If you continuously carry a balance on your credit card, you'll just have added stress to your life that you really don't need there. Worrying about if you're going to be able to make that minimum payment on your credit card at the end of each month really adds so much stress to your life. And if you can do away with that stress, if you can get that out of your life, that worry out of your life, that you might not be able to pay it, well, if you didn't have it there in the first place, that's going to really do a lot of good for your life, for your stress levels. You already have bills are already piling up, you have rent, food to pay, So why add more stress with a credit card, buying things that you most likely don't need? I can't think of an instance where I would need to use a credit card, except for emergencies, to purchase something that is a true necessity in my life.
I know that, and I agree with that. I know that one thing with me is it's still, even though I have the money to pay it off each month and all that stuff, there's still always that stress, and maybe this happens with you too, of always remembering when your bill is due. And like, I never want to miss that payment, because like I said, if you miss one payment, you can actually end up paying that 22% interest rate on the items that you purchase. So even if it was $100 that you put on your credit card in that month and you miss the payment, you're still paying $22 worth of extra cash. So that's one thing that always worries me in the back of my mind. Is just like, okay, always remember the date that this is due. Maybe even pay it a little bit early, because you don't want to miss that payment. So I always set like reminders in my phone, like, hey, don't forget to pay off the credit card. And when you're using like a debit card or some other form of payment, just cash, you don't have that in the back of your mind always. So it does put even a little bit of stress on me, who I'm able to pay off my credit card each month, and that's not a problem for me. But I can definitely see the financial stress it can cause, especially if you don't have that money and then the payment period's creeping up on you.
Yeah, I've had my credit card for about 3.5 years now, and I've never paid a single cent in interest on it, which is awesome to say. But I have had those mini heart attack moments where you might not check your balance, until it's creeping up towards the end of the month, and then you have that heart-stopping moment of, I need to pay this off.
Mm-hmm.
And you can, but there's still that worry there in the back of your head. And so I can't imagine, if you have a balance, if you're carrying a balance each month, and the overwhelming stress that could cause on someone after a while.
And obviously, a really bad thing that can come with owning a credit card is obviously not paying it off, only paying your minimum payments, and then letting your debt kind of accrue over time. And so I have a few statistics here that I found. It says, according to creditcards.com, the average credit card debt per U.S. adult that owns a credit card is $5,284. So that's the average. That's not taking into account people that don't own credit cards at all. It's just taking in people that own credit cards, and out of the average of all the people that own credit cards, it's a little over $5,000. Also, another statistic from creditcards.com, collectively as a nation, we own nearly $1 trillion in credit card debt, on which we pay an average interest rate of 18.76% on, or about $1,292 per household each year. Percentage-wise is what the interest rate they pay on their credit card debt. So those are just a few kind of alarming statistics, and you think if you have kind of a bad thing that can come when you build up that debt, and say you're one of those people that has the average of $5,000 with the credit card debt, growing at that 18.76% interest rate, and that's not going to get any lower very soon. So if you're not paying it off, maybe you're making the minimum payments and you're paying off things at a time, but pretty soon, once your amount gets high enough, your minimum payment's pretty much going to be the same amount of interest that is accruing on that debt every month anyway. So it's just, that's a thing where you can get into so much trouble with a credit card, I guess.
Wow, those statistics are crazy. We obviously know that credit card companies are doing all right with that money coming in. And actually, interestingly enough, we're learning about credit card systems in my finance class right now. And just a side note, each swipe at a store, each swipe at a terminal, those credit card companies do get a percentage of that. And so, yeah, these companies are doing all right, and I would recommend that you don't add any more to their financial success. Yeah, Luke definitely mentioned some of the downsides of carrying that debt over on a credit card and letting those interest payments accrue. And what we're trying to do with this show is we're trying to allow you to be financially smart with your money. And carrying a balance over each month on your credit card is not financially smart, because you're paying so much more in interest that you don't have to be paying. And so, yeah, that's one of the things that we're trying to do with this segment, is let you understand the implications of paying that interest, and then not paying and accruing that debt can be even more detrimental in regards to your credit score.
Yeah, and to hit on that before credit score, I like what you said about every time you swipe your card, the credit card company is getting a percentage of money off of that swipe. So people always think, oh, if I use my credit card for all my purchases and I get that 1 or 2%, 5% cash back, whatever you get, you're going to just be ripping off these credit card companies by using that and getting that cash back, when in reality they're getting a big chunk of money off of everyone that's swiping those credit cards. So in reality, you really can't beat out a credit card company too often, but maybe a few people can get away with it. But yeah, going off of credit scores, a lot of people decide to get credit cards to boost up their credit score, and that's a big thing. And I mean, that was part of a sense of why I own one. Like, life with a high credit score just tends to be easier when you're trying to take out a loan, trying to buy a house, trying to rent a house, maybe get a loan on a car. All those different things become easier with a higher credit score. And Dave Ramsey tends to think that you can still get by on living without a credit score at all. So your credit score isn't high, it isn't low, it's literally just non-existent because you've never borrowed money. And before I got a credit card, that was what my credit score was. Not really sure what my credit score is now. I've never really checked it, but now that I have a credit card, I have established a credit score. But Dave Ramsey talks about how to do these things, how to rent an apartment, how to take out a mortgage, how to do all these things without having a credit score, and that you can still do it in our society, because society so often tells us you can't do these things without a credit score. So he talks about it a little bit in this article on his website, daveramsey.com, and it's titled Living Without a Credit Score, Your Top 3 Questions Answered. The first one is, how do I rent an apartment? He says most apartments will work with you if you can provide first and last month's rent as well as a security deposit. So you'll get that security deposit back, and obviously your first and last month's rent will be a little bit of a security feature there as well. But he says ask them up front about their process and what type of information they need. If you want a credit score and you don't have one, if they want a credit score and you don't have one, simply tell them that you've never gone into debt and you use cash. Get a rental history referral from your previous landlord, and if it's your first time renting, you might have to look around for a little bit, but you'll be able to find someone to work with you. Dave Ramsey's one that believes a lot in real estate, and he says that he never looks at credit scores when he is renting to people in his real estate. He asks for rental history referrals, and then if they don't have those, then he works with them by having that security deposit or that first and last month's rent. And it kind of says the same about taking out a mortgage. There's different websites you can go to, different mortgage companies you can go through, and then there's also things called manual underwriting, and then non-traditional credit or no credit score lending that some banks still do to this day. And ultimately, he just talks about how, is it going to be tougher to live without a credit score? It will be. It'll be tougher than having a really good credit score, because then they're just willing to give you those loans. But when you don't have a credit score, that also means that you've never borrowed money, you've always paid cash for everything. So I would also think that when you don't have a credit score, it also looks good that, hey, he's never had to borrow money and he's always paid cash, so that means he's a pretty responsible spender as well.
Yeah, that's a really interesting point that Dave Ramsey mentions, that you can live life without a credit score. And that may seem crazy to everyone in today's society, but you can do it. And I think you can do it just as well as if you have a high credit score, if you will. And interestingly enough, I actually worked as a credit analyst at a firm in Grand Island, where I would analyze personal credit. It was business lending, but we would analyze the personal guarantor's credit, looking at these Expedia credit reports and everything like that. And so it's crazy that everything that goes into a credit score, credit scores are really all encompassing. And so a few things that go into your credit score are obviously your payment history, the number of credit lines you have open, the number of running balances on these credit cards. So if you carry a balance each month, that actually negatively impacts your credit score. And if you closed your account and when you closed your account, and if you opened an account and when you opened your account, and there's actually so many other things that go into it, but those are just the main items that go into it. And so credit scores they can be an indication of how well you pay back your debt. But I think at the same time, Dave Ramsey makes a great point. If you have a 0 credit score, I think you're so much more financially responsible, because you've never gone into debt. You've never had an instance where you didn't pay back something on time. And so, yeah, I think you can definitely get through in this life with no credit score at all.
Yeah, and I would almost turn it vice versa a little bit too on the people that say, well, you need to get a credit card to build up that credit score. there's just as many, if not more, people that take out credit cards that destroy their credit score by taking out credit cards. I mean, you see the average debt of $5,284. Those people that have that average credit card debt are obviously not helping their credit score by any means by just making the minimum payments on their accounts either. And when you have a low credit score, it's even more difficult to rent an apartment. You pay higher interest rates, you pay higher insurance rates, and you usually have difficulty obtaining a job when you have those low credit scores, because that's something that employers tend to look at too, is your credit score and how you manage your own money in your own life personally. But so I would kind of turn that around, vice versa, that yes, if you do take out a credit card, you have the potential to earn a higher credit score, but you also have just as much potential, if not more, to just destroy your credit score for a long time.
I agree with that, and I think that was one of the reasons why I took out a credit card in college, was to kind of start building that credit score a little bit. I knew I didn't really know much at the time of how to do it, but I knew that if I used it a little bit and paid it back, that my credit score would be okay. But yeah, I think the negative implications of mismanaging your credit card are so huge. The higher interest you'll pay, the higher interest rate on your mortgage, or maybe you're not able to qualify for the term that you want in your mortgage. Of course, car payments, although after listening to us for a while, you obviously should know that you shouldn't have a car payment, but you know, all these things that a low credit score can cause in your life are just, the downside is huge. And so I would really recommend, if you're going to have a credit card, manage it responsibly, pay it off at the end of the month, or like Dave Ramsey recommends, don't have one at all.
Yes, that's exactly right. And I guess the last thing I kind of wanted to touch on with what's bad about owning a credit card, what bad can come from it, is you can get into this habit of getting a credit card for everything. We talked about there's different credit cards for stores. I talked about how I got one credit card and I've probably gotten 3 different applications in the mail to get another one. So once you get that first one and they know that you can kind of handle it, or even they know that you have a credit card, stores and businesses and whatever will just try to get you to purchase more credit cards, to take on more credit cards. And that can be kind of daunting, because when you have a lot of them to keep track of, I told you a second ago that it's tough to keep track of one, and I'm always worried about missing that payment.
Mm-hmm.
So when you have 5, 6, 7, 10 credit cards, whatever it may be, to keep track of, I just can't imagine keeping track of all those different payments and when they're due and what amount is owed on all of them.
Yeah, I think it would just be overwhelming to have more than one credit card. I don't necessarily know if you would need more than one, but some people do, and I think that would just complicate things in life. And you know, one thing that I wanted to mention too is credit cards are not just free money. A lot of people think that if you get a credit card, it's just a free loan that I can get to make these purchases, but we need to understand that no one is just willing to give you money for free in this life and expect nothing in return, except for maybe family members who are being nice to you. But these financial institutions that I'm probably going to work for someday, that extend you credit, expect to be compensated in one way or another. And so if you continuously carry that balance on your credit card, you're going to pay the interest rate on the credit card, and like we mentioned before, these interest rates are enormous. According to an article on creditcards.com, the national average, the national annual percentage rate, APR, that is normally quoted on these credit cards is 15.07%. And that's crazy. You know, that's just an average. There are cards out there that are charging way more, you know, in the 18, 19, 20% interest rates. And I think that's crazy. And let me just give you an example of this. Let's say you have a $1,000 balance on your credit card, and let's say you make the minimum payment, let's say it's $25 at the end of each month, and that leaves you with $975, right? You will then be charged the 15% interest, let's just say the national average of 15%, on that remaining amount, which is about $146, give or take. And interest, and the next month you go to pay your bill, all of a sudden it's $1,100, and you don't know why. And I think a lot of people overlook this interest because they're not properly analyzing and managing their accounts, and they're not looking at their statements, and they're not seeing the enormous interest rates that they're actually paying. And so I think that's why a lot of people don't see necessarily the downside of carrying that balance or just paying the minimum on these credit cards, and it can be absolutely devastating. I mean, $1,000 balance charging you $146 in interest. I can't even wrap my head around paying that. And so it's understanding the interest rate that you're paying and understanding the terms that your credit card is charging you, I think will really make you understand the downsides and the bad to having a credit card.
Yeah, and it all goes back to kind of full circle where at the beginning we talked about before you take out a credit card, before you get a credit card, you must know what you're getting into and you must know what a credit card is, and all of those things go into it. So that's what we would recommend is if you get a credit card, you must realize all these bad things that we just went over that can happen when you do take it out. And once you start to realize those things, if you don't think you're responsible enough to take out a credit card and to stay away from these bad things that we just talked about, then it's probably not the right time to take one out. But that'll do it for that 15 minutes of the show. We will come back here in a little bit, and we're gonna bring up the mood a little bit by talking about some of the good things that can come out of owning a credit card, because there are some good things that can come out of owning one, just like there are some bad things as well. We'll discuss this when we come back. It's 41 minutes past the hour. This is the Weekly Allowance.
One segment to go.
All right, you can answer my brother's question. You want me to?
What are you asking?
Can your credit be affected if you spend less money or no money on your credit card during any given month? Or during any given moment, he said. Check that. Can your credit be affected, your credit score be affected if you spend less money or no money on your credit card during any given month?
I want to say, like, I'm pretty sure.
Yeah, look it up. Does your credit score go down?
Plus credit cards go unused.
You don't use
credit utilization ratio. Generally, a lower ratio is better because it indicates that you're more able to repay debt. However, a ratio of 0 may actually hurt your score.
It says even if you have no balance on any of your cards, even if having no balance does drop your score, the impact should be small and temporary.
Yeah, it's not going to hurt it. Like, it's not going to be detrimental.
Once you begin spending again, you should regain any points you lost due to an activity.
Yeah.
Oh, that's an easy way to answer.
Does he say he never uses it or just barely?
Just like I mean, I'm sure he uses it, but he's just asking, like.
Because one thing that says is card issuers have been known to cancel cards after sustained inactivity. If your account's closed, that is pretty devastating to your credit card.
Oh, then if you don't use it.
If you don't use it at all, yeah.
Then they'll close it for you.
Yeah.
Okay, that's a good thing to put too. Okay. I think he just I think he has a Discovery card, but. We should almost do something where, like, I don't know if we could, like, create an email account or, like, I wish there was, like, a messaging system. I mean, we could take phone calls, but I don't know how to work that phone.
Yeah.
We could almost give out, like, our Loper emails and be like, hey, email us with our Loper emails, but
Yeah, good.
I don't know if anyone would do that or not. sometimes you see like text, like when there's like a big speaker and he's like, text your questions to this number.
Oh,
and
yeah.
then like they filter them through.
Mhm.
We could do like Twitter. Twitter would be easy. Like
Yeah.
just
we can see questions.
yeah,
But then
just
people
hashtag
might,
the weekly allowance with your question.
yeah, but then they might not be like as willing to
Sure.
ask a really good questions or like that.
Sure. Message us with your questions on Twitter.
You want to lead this next segment?
Yep, I gotcha.
And then we'll go like
40 seconds.
emergencies.
Yep.
Fraud.
Yep.
Cash back and rewards.
Yep.
And then I have just a little segment on using a credit card for businesses.
Brother Ben also said, also I don't know if you know, but swiping debit card and clicking credit, he's still typing. And we're back on the weekly allowance here on 91.1 KLPR. So for the last few minutes of the show, we wanted to end on a little bit more positive note and just talk about what good comes from owning a credit card. Because like we said before we left for break, there are some good things that can come from owning a credit card if you're responsible, if you kind of know what the bad things are and you stay away from those bad things. Obviously, there's always going to be a little bit of risk there that you could fall into something or forget a payment, something like that. But as long as you're responsible, there are some good things that can come from owning a credit card. So Austin, what are some of the things that you've seen from owning a credit card, some of the good things that you found out of it?
Yeah, so this is where we're kind of divulging from Dave Ramsey, right? That's crazy to say that, but you know, we've been talking about the negative of credit cards, of using credit cards this far in the show, and we want to tell you that credit cards are not all bad. We're not totally against credit cards in any way, shape, or form. We just want you to be responsible when managing your credit cards and to be in control. And so some of the good things, to first start off, of course, is to handle emergencies with credit cards. Coming to college, I think that's one thing that my mom recommended me getting a credit card was for emergencies. And you know, we obviously recommend that you save up your emergency fund, right, of 3 to 6 months of expenses so that when these emergency situations do come up, you aren't worried at all and you're able to just kind of write a check for that emergency, whatever it may be. But if a true emergency situation does arise, credit cards can offer a great way to pay for that situation until you do have the appropriate funds, until you get your paycheck to pay the card off at the end of the month. And so these emergencies may be, maybe if you're having car problems and you need to get to work or you need to get to school, and you don't, you know, you're a college kid and you don't have a beefy bank account right now, they do offer a great way to just take care of that emergency and then pay it off at the end of the month.
Yeah, I think emergencies is a great one, and you hit on emergencies correctly, where an emergency isn't going to the shopping mall and buying the newest pair of shoes with your credit card.
Right. Yep.
It's all about your car breaks down or you need something for a certain month, and that having that 30-day grace period can really help someone out if you're in between pay periods or haven't received a paycheck for a week or so and you need that money. And you're not going to get it for another week or so when your pay period comes up. So that's one thing that a credit card can really help for. I agree with, and when you're using it responsible and you're able to pay it off with that emergency, whatever it may be, when you're able to pay that off, it can really help you out in those situations. Another thing we see is credit cards can offer against fraud protection, sometimes better than other payment tools can. Kind of depends on what the payment tool is, but we do see pretty good fraud protection, and internationally, I found that to be pretty true. That's kind of a reason I went with a credit card when I went international last spring. I thought having a credit card would be a lot easier to take internationally than a debit card, especially when it came to fraud protection there. It's a thing where you have money in your debit card account, obviously your checking account that you use when you're making debit card purchases. With your credit card, if they were to get the number to your credit card against the number to your debit card, they would have access to all the money in your checking account. Whereas if they got the number to your credit card they would have what's built up to your credit limit or however much you can spend that month, and then they would be done spending money because they would max out your credit card there. So there's a little bit when you look on at fraud protection that way. It can kind of be helpful then. I think you're still going to get your money back either way if someone steals your debit card number and uses it, or if someone steals your credit card. You're going to get the money back either way usually, unless the bank can't find proof of this fraud. But it may be a shorter and quicker process if you do get it done with a credit card.
Yeah, and just to put some numbers behind the situation you just described there, Luke. Let's say you're at a gas station, you're getting gas, and you obviously have your debit card and your credit card. If you have your debit card with, let's say, $1,000 in it, and you have your credit card with a certain credit limit, and you use your card and somebody skims it, right? They steal all your information on that card. I would feel a lot safer if somebody is using the credit card company's money as opposed to draining my bank account of that $1,000 and me having to spend the time to get that money back into my account, and I may need to make a few other purchases during that time. So I would feel a lot safer knowing that my hard-earned money is not at risk. So I'll use my credit card a lot when I'm shopping online. I think that the credit card companies call card not present transactions, and it's just obviously I think debit cards and credit cards do offer the similar fraud protection, but I think it's just a little bit safer way to shop online and maybe to do some of those more risky transactions.
Yeah, I would agree with that. Another thing we see good from using a credit card can be earning that cash back, getting those rewards, maybe hotel rewards or frequent flyer miles. Like we said before, you're not going to become a millionaire off of earning this cash back or earning these rewards. You're not going to save a whole bunch of money. But everyone does like free money, and like we said, if you're being responsible and you're earning $35, $40 a month, or you're getting that free hotel every once in a while, or you're getting the cheaper flight every once in a while, and you're being responsible about all of it, then it can be beneficial. And I know I'm one that if I can just kind of make a purchase that I was going to make anyway and get rewarded for it, then I'm down for that, and I really enjoy doing that. But that's the thing where some people fall into making those purchases just to get more cash back of maybe the purchases they wouldn't have made before, or maybe buying that flight or booking that hotel that they maybe wouldn't have booked unless they would have gotten those rewards, making it kind of a purchase that you wouldn't have made before. But as long as you're already going to make that purchase and you're still getting rewards on it, I don't see any issue with any of that.
Yeah, credit cards that offer cash back are really attractive, but you hit it right on the head when you have to be disciplined if you want to use this correctly and get the maximum benefit out of it. You can't go and make those purchases that you wouldn't have normally made. And we understand that you're not going to make a ton of money using these credit cards to get cash back. Dave Ramsey makes a good point. No millionaire looks back on how they became a millionaire and said anything about their rewards on their credit cards. It's small and it's minuscule, but to maybe a college student or someone just starting out in life, it can offer an attractive way to earn a little bit more, be rewarded for those purchases that you were going to make anyway. And so many credit cards that we see now offer generous cash back on purchases. So I personally have a credit card that offers 1.5% cash rewards on earned on every dollar spent in net purchases, which are purchases minus returns and credits to my account. And so on average, I've tracked it for a little bit, and it varies each month, but on average I earn about 15 to 20, sometimes 25, depending on the month and how much I'm using it. If I just redeem, and I really, I go on the mobile app and I redeem it right back to my savings account, and it's a great way to just earn a little bit of money and put it away each month. And actually, funny story, this summer when I was traveling a lot, I would be staying in hotels that were paid for by the corporation that I was working with. And so we would all put these hotels and everything, all of our expenses on our personal credit cards, and then being reimbursed and pay them off. But when I was doing that, I was earning, upwards of 40 to 50 on a good month on my credit card, and just cash back every month, which was pretty nice for a college student who's doing a little bit of traveling. But I understand this might not be a lot to a lot of people, but to a college kid, those are some pretty nice returns, I think. And it's really something that I didn't have to work a whole lot, work too much harder to earn. And so, given I pay my card off at the end of each month, and I never pay that interest bill, so I really utilize it to the max benefit.
Yeah, as college students will do pretty much anything to get a few extra bucks, scrape around for a few extra bucks. That's an inspiring story right there. And I guess kind of the last thing I had on my list was they can help you establish a good credit score and a positive credit history, kind of what we talked about. In life, if you do have a good credit score and you can maintain that good credit score, it can be easier to get loans. You don't have to go through the process of jumping around and finding someone that will that you can take a loan out from, and you might be able to get better interest rates too. Again, the higher your credit score, the better your credit score is, the better interest rate you're going to get as well. So if you can establish that really good credit score, you can take out loans, maybe a mortgage one day, put down a good down payment, and then get a good interest rate on it as well, and that can be good for you too. So that's something a credit card can help you do, is build that good credit score as well. We did have a question come in a little bit earlier during the show from one of our listeners, and their question was, can your credit score be affected if you spend less money or no money on your credit card during any given month? Austin, what do you think of this question?
It's a really good question, and I actually worked as a credit analyst, as I mentioned before, 2 summers ago, and I actually really had to think about this question. I went through all of the Expedia training that those credit analysts go through, and this was a really good question, because I think this is a lot of situations, hopefully, where a lot of people are in, that they're not utilizing their credit card a ton. They're not using it for every purchase, but for some of those cashback reward purchases, they are using it. And so Luke has a little bit more information than I do on this, but one caution that I would tell you is that if you're constantly maintaining a zero balance, it could actually hurt your score. And one way it could do that is by these credit card companies have these algorithms that measure how much you're using your credit card. And if you're consistently not using your credit card each month, they will shut your credit card off, which can dramatically drop your score if you do have a credit card that's shut off. And so I would just caution you to manage it, and if you do get a notification, maybe utilize it or go about the proper way of doing so.
Yeah, for sure. And to answer that question, I would say even if having a no balance on your credit card does drop your score, the impact should be small. It should be small and temporary. It shouldn't be a big hit on your credit score. So it's going to be small and a temporary thing. So say if you have a low balance or don't spend much in 1 month or don't spend anything in 1 month, once you begin to spend money again or start to put more money on that card again, you should regain any points that you lost due to the inactivity with your card. So that's just something I would keep in mind. So you can have a bad month in the sense of not spending much on your credit card, but you can regain those points by spending again with it and putting money on it the next month. So 1 month, 2 months probably won't hurt you too bad. But again, like Austin said, if you go 6, 7, 8 months without spending anything on your card, it could dock you significantly, and your credit card could get shut down by the company. So I guess just to kind of wrap up the show, you heard what credit cards are, you heard the bad that can come out of them, the good that can come out of them. I would say the main points to take away is if you're going to take out a credit card, make sure that you are responsible enough to do so. Make sure you know all the risks that come out of taking a credit card. Once you know those risks, once you feel that you're responsible and mature enough to take one out, then make sure you're paying your credit card balance in full each month. Don't just pay the minimum payments. That's something that a lot of people can fall into. Pay your bills on time. Know when that due date is. Pay everything on time. Don't wait until after the due date to pay your bills. Apply for credit cards that are needed only. Don't apply for every credit card application that you get into the mail, or don't get a credit card from every single store that you go to. And then keep track of what you put on your credit card and then what you buy with other payment methods. So kind of keep track of both there, kind of like we talked about with budgeting. So those are that's kind of the wrap up of the show. And that does it for this episode of the Weekly Allowance. We hope you enjoyed our discussion on credit cards. Tune in next Friday at 3 o'clock to hear about our next topic. In the meantime, whether you are young or old, don't put your future on hold.